I've been meaning to talk to you guys. I'm gonna go ahead and need to ask you for some money to cover my GameStop short. Like, I know this is gonna be a hardship, but if Carson could sell that painting, send me the proceeds, I would really appreciate it.
We filmed about a week ago, the short of it, and then that was right before all hell broke loose. So here we are reshooting, but I think a probably much more interesting episode. Um, Probably a lot of mad squabbles we got to get out here. So yeah, let's turn it over to Tyler, who's going to try to keep us focused and really ask, I think, the key questions.
Thanks, Carson. So what the fuck is happening right now?
I'll go first. I have no idea. Thank you.
All right, so look, my take on GameStop. This was like an economically motivated trade. Okay, I mean that's what I think happened. And to be clear, I had never read Wall Street Bets until last week. I had no idea that this thing existed. But there's a thread that's 4 months old that says GameStop is going to be the biggest short squeeze ever, bigger than Volkswagen, which I think it has turned out to be. It's a great technical analysis of why this is the case. So the author says, okay, you get the float here, but then you get this guy who recently bought in, Ryan Cohen. So the real float's even smaller. And then he starts talking about if you buy call options that are out of the money, assume an average delta of 20, then you could see how by buying only this many options, there's only this much supply of stock available to be sold to the dealers who have to delta hedge it. So it took 4 months for this to come to fruition, but originally this is a really smart trade. And one of the things that's interesting to me is we got our balls squeezed off over the summer in GSX by some hedge funds that were based, that went long and they were also, somebody was also selling a lot of puts, which the put buyers were probably buying and putting on deltas and pushing the stock up, and there was all this gamma embedded there. And that's how, after we came out public on GSX at 35, the stock basically tripled. So this causing a short squeeze, I mean, this is an institutional strategy. Like the guys who did this are among the best known in the hedge fund world, smartest, biggest funds. So it's interesting that this has been democratized basically. And I guess one of the ironies, I think some of the funds that were part of this have gotten punched in the face in the past week and a half as well by the dislocations. But I think this was economically motivated. But then, the question is, well, what was this whole thing with like Melvin and the anger and like is this populist anger that how Wall Street is rigged? And my take is no, because everybody around the world is fucking angry right now. I mean, like I had my 3-year-old daughter say the other day that she has no friends aside from her stuffies because we can't send her to fucking preschool because of the whole COVID thing. So, I mean, how much does it take for me to snap? Now, you put me in a group of people who are all pissed off, and there's a catalyst, there will be a mob. We saw this January 6th. We saw this repeatedly throughout the summer. So I just think there's fucking anger, and I don't know that it's like, well, because Wall Street is rigged, and I mean a lot of the people who've been these retail traders, I think, have been probably doing okay if they got into the market since April. They have to be really unlucky to have not made money by buying call options. So I just think that once there was blood in the water from Melvin and from Citron, I just think it was like people wanted to break something. And that was the target that was right in front of them. And it's just a general anger that we feel, not an anger about Wall Street or this or that.
I think in respect to GameStop or AMC or National Beverage, it's interesting. These setups, if you like, have been out there for some time. The very small float, the heavily shorted, the amount of like real buyers and sellers. Which also touches on something I want to come back to with the passive holders there as well. Um, I think with anything, the trigger is is never that easy to identify ahead of time. I mean, we were certainly running much more conservatively positioned sizes than we had previously because we saw what went on from October, November, December, and there was no reason to believe that just because it was January, it was going to be any different. Now, that's not to say that we were geniuses sitting around thinking that you'd see some of the largest short squeezes we've ever seen in history. It's hard for me to work out if it's anger directed at the system being rigged, which when you look at the arrangements you have between Robinhood, Citadel bailing out certain hedge funds, you can certainly paint a picture that that's not a great fact pattern to explain to the average investor, regardless of whether anything improper did or didn't happen. That certainly looks clubby. In terms of fragility of the system, this is a real problem. The headlines at the moment and most of the ire and the anger is directed at the short side, and certainly the moves in those stocks, and the people that have been on the other side and the amounts of money that have been lost are a really sexy, interesting story. But part two of this is going to be how hedge funds, especially those running significant amount of leverage, are going to have to react, and that's kind of known as degrossing in the industry. So as short bets move against hedge funds and hedge funds feel less comfortable shorting very heavily shorted stocks, they are going to have to sell their long positions. And that is actually going to cause a lot of pain to most investors. And it's probably the unintended consequence that people haven't really considered while we're all bathing in Schadenfreude of, very successful people losing lots of money. And, I think that potentially does have, a chance to become far more systematic. And, to me, it actually reminds me a lot of, in some ways, what we saw with long term capital management 20 years ago, where you had the smartest people, everyone crowding into the same trades, far too much leverage, and when you need to unwind that very fast, you end up with forced sellers, forced buyers, and you can actually end up with a very significant systematic problem. Now, last time that happened, the largest banks on the street got together and bailed them out. This time we've seen private sector bailouts, which, as far as I'm concerned, is much better than public sector bailouts. But if you were to see this really spiral out of control, we end up with a much bigger problem than a few short sellers getting punched in the face and one or two hedge funds having to unwind.
I have a qualm with the passives in all this because I think they're the ones that really constricted the supply of the float, the Vanguards, the BlackRocks, everything else. And the payment for order flow type thing enabled, spreads to tighten, passive to take all that money from active management. And as you guys know best, the due diligence of stock picking went out the door when that happened. And I think we're at the end of a long-term cycle in that happening. Can we take this conversation to Robinhood and tell me what your thoughts are there? Like, where do they stand in all this?
Well, look, first of all, how Carson explained the genesis of this, I think is absolutely correct. This has its roots in the summer riots, the angst there and anger that never ended, to January that was just a different group of people. Ironically, I think all of these people in different groups are in the same Reddit chat room that I'm seeing now that they have 7 million people in there. And it all seems to be the same kind of anger boiling over. Freddie is absolutely correct. The knock on effect of unwinding these shorts is that you're going to be selling some of these great long positions. But we have to admit here, like, clearly, the retail investor is being screwed. And when you talk about the game is rigged, of course it is. And when you talk about collusion, they constantly accuse short sellers of collusion, which in short activism makes no sense mechanically anyway. But collusion on the Reddit forum. How about 5 retail brokerages, just the retail brokerages, all on the at the same time, saying you can only close out your trades in GameStop, but not necessarily the institutional brokerages where they continue to trade. And we're going to tell these people they shouldn't feel like they've been screwed. There's just no way. That's absolutely what happened. And Congress wants to jump in, and what's going to end up happening is they're going to tamp down on the freedom of speech, and the banks, they're going to do nothing, because the minute they go after the banks are gonna just like, let me push this switch here, let me push this button. The market's going to pull back 20%, and Congress is going to capitulate, and they're going to come after the retail investor.
Partially agree, but there's some things that I don't agree with. This was not retail only what happened. I mean, even today, some of our counterparties will not allow new positions in GameStop, AMC, etc., even in a cash account that's fully funded. Now, the reason I think is that they had the same issue Robinhood had yesterday, which is Robinhood, so Depository Trust Clearing Corp, DTCC, said to Robinhood, you need to post a lot of additional collateral, money that Robinhood didn't have. And I think a lot of the other retail brokerages, similar problem. I mean, most of them, especially the ones that are free, are not associated with investment banks. They don't have all this cash and collateral sitting around that they can post. So, DTCC. So one of our counterparties yesterday said to us, I mean, we had emails, we had communications from 3 of our counterparties saying there's this restricted list, no trades whatsoever, only closing trades in these positions. Again, this applied to cash accounts as well that were fully funded where you're not on margin. One of them said to us, it's like, well, our risk models, when the implied volatility of a stock is 500%, like our risk models are just not functioning. And I think that was the issue that, was happening at DTCC, where it's like, how the fuck do we analyze the risk here? And so they just issued this, these massive collateral calls for exposure in these names. And, like Robinhood and others couldn't meet it. I think our counterparties can meet it, but they're wondering, like, why the fuck should we tie up all of this collateral? I mean, they basically said, we're not going to put in new trades. We're not going to tie up, more collateral. So there's that. Okay. But I think the thing with Robinhood and these other free apps, I mean, it's no secret that the order flow gets sold to HFTs. HFTs front run them. Right. Another game that I believe some of the HFTs play is because they can see where the stop losses are, where retail stop losses are. So, these machine learning algorithms that are ironic, are incapable of having mens rea. So the guilty mindset needed to commit a manipulation violation. They can smack, I believe that one of the things that happens is these algos will smack bids out of the way to get to the retail as they short, to get to that retail puke point, because again, they're seeing where the stop losses are in the retail books, and then you get these massive pukes. So retail has been getting fucked by the sale of this order flow to HFTs. And to me, like, when you look at Robinhood, it's the ultimate manifestation of the Silicon Valley model, right? We are the products that are sold. Like when you're using Twitter, Gmail, etc. That's exactly what Robinhood does. It's not free. You as an account holder, we are selling you to these guys who are super fucking smart. They have amazing systems. They trade it, like the fastest traders on the street. So I think that's a way in which retail is getting fucked. And, maybe this is kind of starting to get, open their eyes to this a little bit. But the final thing, and this is, this is a really high level point, but I have no doubt where this ends, right, for retail. I mean, tears. I don't know when. I mean, it could be tomorrow, it could be, however, many years. But every time you get an asset bubble, okay, and like we've been doing this, every 10 years now we have this blow up, roughly 10 years we have blow up in our financial system. When bubbles burst, wealth isn't destroyed, it's just transferred. So, once again, and like this is part of how the middle class in America has been hollowed out, because they got sucked into the internet bubble and that wealth was transferred to a relatively small number of people. especially, in investment banks and, the entrepreneurs who brought shit companies to market. Then the housing bubble, and they bought houses that they couldn't afford. And then that got blown up. But there were small number of people who really benefited from that. Then you have this thing. And, like, one of the guys who I think is really just egregious in this is this fucking guy Chamath. All right, like, we have all these like fake populists stepping out now, like, oh yeah, fight the fucking man.
So this morning I woke up after spending all last night in Wall Street bets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses. I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. Or a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, like, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
Like, he just got out of his meeting at Credit Suisse probably. And this dude's just trying to push SPACs on the public. And I'm sure some of them are dog shit SPACs. And he's going to be one of the big beneficiaries of this bubble. Like, all the guys who are selling SPACs, who are underwriting these deals, they're beneficiaries. When this thing blows up, whoever's holding bags in SPACs and some of these other dog shit stocks that have been bid up, those are going to be the losers. And so once again, we're going to get more people falling out of the middle class, and then small number of people, their fortunes are even more elevated than they were beforehand. That, to me, is how the average man really gets fucked in this never-ending cycle of, we have too much leverage, things blow up. What's the cure for that? More leverage. Things blow up, more leverage. That, and like, nobody has the political will to stop that cycle.
Yeah, I've kind of likened the lack of political will to to stopping the cycle as you're a kid whose parents divorce, and you go max out the credit card, and one of your parents is saying like, hey, you're going to get a Saturday job and pay that off. And the other one's saying, here's a new credit card, and it's sitting on like the front seat of your brand new car I bought you. Come live with me. And I get that politicians, they run in short cycles wherever you are in the world, unless you live under the benevolent love of the CCP, of course. But, they're looking to get votes. As for Chamath, interesting character. I gotta say, some of the things I hear him say on CNBC, like, are actually really well packaged, kind of great kernels of truth there. Like, him railing against bailouts for, guys who own a ton of stock.
This is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt, or the folks that own the equity. And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out.
He's like, no, you take risk, okay? You own a stock, or you own a preferred, or whatever it is. Like, a bailout does not mean that the airline stops being able to fly. It's restructured, and you take risk. You should get fucking wiped out. But, the Pied Piper SPAC dynamic is troubling, because I think, as we've discussed before, the incentives in SPACs are incredibly misaligned. The diligence process, I've not been on the other side of them, but I'm hard pushed to believe that someone can be an expert in, mining, 3D printing, healthcare, and space travel all within the confines of a year.
Well, what about SoftBank?
Well, they're back to being geniuses. If we want to talk about conflicts of interest, it just came out the other week. Key lieutenants, I think Rajiv Misra and one other guy there, basically was allowed to lever up to the tune of, 500 million or $1 billion guaranteed by Sun back in March to ride the stock boom. So, even by American standards, that's egregious. I think Carlos Ghosn's probably wondering why he's getting so much heat for tens of millions of dollars here and there when these guys are going to walk away with like $1 billion. You just see it all over. It's really corrupt and problematic incentive structures. And look, to a certain extent, I think that explains some of these hedge fund blow-ups. I mean, a lot of hedge fund structures, economics crystallize every year. You're running billions of dollars. That is an annual call option on getting things right. That's kind of problematic too. You ask why these things have gotten so big. Why not?
What's the next latest, greatest big SPAC? Is it WeWork working on a SPAC right now? I mean,
Yeah.
why wouldn't you put WeWork in a SPAC? I mean, take a piece of shit, put it in a piece of shit vehicle, and everybody's going to love it.
Yeah, I mean, it's a business model that's maybe obsolete. Like, of course it should go public.
Right. Right.
Next thing, they're going to be taking chimney sweeping things public via SPAC.
Weren't you involved in one of those businesses once?
It's a great business, that chimney sweep business. Yeah. I had to divest my partner from one. He made $10,000. Fantastic. I'd take that today.
On the long short hedge fund point, is there a possibility, you guys are activist short sellers, right? Is there a possibility that you saw the cycle first before the long short guys did, where you saw all these crazy irrational moves in these stocks, it got out of the way, and now that retail has become a bigger percentage of trading volume and the volatility is so much higher, could we be seeing the death of the hedge fund long short market neutral model?
I mean, I think we're going to see an adjustment to it, but I don't know that we really know what the retail trading market looks like post COVID. When people are kind of back to work, when the market does roll over, and everybody realize that they're mortal, and that these things can hurt them and their family. It's still rather new. I think we're going to see 6 months to a year from now what the retail market really looks like. It's definitely changing the landscape, no doubt about it. And I've said for years that this 2 and 20 model for a 15, 20, $30 billion hedge fund is ridiculous. What's your edge versus a mutual fund or any other passive investment vehicle? I mean, statistically, not much, and generally nothing at all.
I mean, it almost sounds trite to say, but the markets have not been healthy for a long time, right? And they're just every year there are fewer and fewer people who are putting money to work based on questions like, what do I think this company's free cash flow prospects are long term? What do I think of the ability to develop new products? I mean, more and more we're seeing it's really about gaming flows. Like, what index might this be added to, and then which funds are going to come in and buy it? And then now you've got the retail saying, okay, this is going up, so now we're just going to buy this, and we're turning into momentum. You've got these other hedge funds who are like, what's getting squeezy here, and how can we figure out how to squeeze? And then you've got passive, and passive is really, and credit to Mike Green, who's on Real Vision a lot. I've spent a decent amount of time so far this year talking to Mike and understanding how passive really is making the market more fragile. But so basically, passive buys no matter what. The problem is, Mike's estimate is that for every dollar that an active manager puts into the market, it increases market cap by 2.5 times. Now, the reason that it increases it by more than $1 is because you've got, this is your shares outstanding, but here's your float, so you've got less of a supply than this, and you've got to pay up a little bit in order to induce somebody to sell. So on average, he calculates a 2.5 multiple. he calculates that the average multiple from from passive putting a dollar into the market is 17x. And the reason for that is if you're an active manager, you're going to take time to buy something. So if the bid's 10, the offer's 11, maybe you're getting done at 10.50. You're rarely going to lift the offer, you'll wait. As passive replaces active in the market, so if you started with that, that example, so here's shares outstanding, here's float, but if passive is still getting positive flows, passive is not going to be selling, it's going to be buying. So here's what's left in terms of active, people who can actually decide to sell. The hodling mentality gets baked in, and so passive really has to pay up to induce them to sell. Okay, this sounds great if you're getting a free ride, but here's the problem, and this is what happened in March of last year. When there are outflows from passive, because there's some shock, all of a sudden, if passive is this and active is that, who's left to buy what passive is selling? Because passive must sell. And that's where the fragility comes into this. So, we don't have capital markets that are, where money is being put to work based on who the best users of this are, who's going to create the most value. It's all this other shit that really is just a distortion that's caused ultimately by monetary policy. And so when people say, well, what are the regulators going to do? Like, I don't know that you can have a regulatory response to this. This is just, the GameStop, it just is the most glaring manifestation of how the markets just don't do what they're supposed to do.
Yeah, it's basically a political decision at this point, right? You hear Jay Powell talk that, there's no side effect of monetary policy on asset prices that he knows.
Now is not the time to be talking about exit. I think that another lesson of the global financial crisis is be careful not to exit too early. And by the way, try not to talk about exit all the time if you're not, if you're sending that signal, because the markets are listening. Monetary policy is only sometimes about the most likely path. It's often about how do you conduct risk management to avoid, downside cases. So that's a little bit why our guidance on both rates and asset purchases is not time based. It's outcome based. It requires the achievement of various objectives, and those objectives will come when they come.
This is the problem, right? Like, we should have been out of emergency monetary policy years ago.
Yeah.
Okay, we have COVID. There's a demand and a supply shock. Like, I can't tell you that you should be hiking rates right now, but you just added so much liquidity on top of the liquidity that was already there. And Freddie brought up long-term capital management. And so here, here's everybody said, LTCM, like, moral hazard. Well, you know what, like, we got to bail it out. We got to do what we got to do. Then you get to the financial crisis. AIG got bailed out because if they weren't bailed out, we would have all been seriously fucked. Yeah, but isn't there a moral hazard here? Well, we'll deal with that later. And here we are again with COVID, like all these private equity firms, all these companies that had these massively leveraged balance sheets, where they'd use the debt to fund share buybacks and shit. They basically got their asses wiped. And one thing that occurred to me just this morning, could this have reined in some of this excessive speculation? Remember when Hertz, about a little less than a year ago, it was bankrupt, and the stock just got bid way up in this frenzy. And Hertz filed to do an offering, and it was fully disclosed. We're going to do this equity raise. The money is going to go right into the pockets of the creditors, and then eventually the company's going to be reorganized, and the stock is going to be worthless because the QSIP and ISIN are going to be erased from the system. People would have subscribed to that, and the SEC stepped in and said, whoa, this is fucked up. And I remember a lot of people, I respect at the time saying, man, I'm really glad the SEC stepped in. They did the right thing. But did they? Would that have been a lesson better learned, because much less painful, earlier in this, before this thing really, this speculative frenzy really took off? Would that have been better?
I'm looking forward to what I think will be the ECM deal of the year. And look, I don't want to self-congratulate, but we did call the deal of the year for private equity last year, which was Leon Black's deal, and people have noticed that. So I think GameStop should do a significant offering, but not of equity, of debt. I'm thinking somewhere in the region of 2-3 billion, and I think the use of proceeds should be to buy deep out the money call options, um, because that has been the best use of capital I have seen in decades.
So why not do converts and use it to buy deep out of the money call options? I like that better.
I like that. Okay, juice on juice. Let's get it done. So look, GameStop, if you're out there and you are looking for some ECM type advice, you heard it here first on Zer0es.
Only a 3% advisory fee on this, guys. Cut rate. Just for you. Just for you, my friend.
Moving on from there, why don't we touch on Andrew Left and what you guys saw there?
You guys fucking recording this? You can't be serious, right? What do you want me to say? I mean, really, I mean, like, the guy's got a long track record and history of, I mean, really doing some great work. I mean, there's no argument to that. And you know what a great trader he's been over the years as well. There's no argument there. And I totally get we're all testing new formats like we're doing right now, right? That we know that the end user, the reader, just has such a short attention span, that we're trying to make things a little more dynamic, a little more digestible. But I mean, really, I mean, you're coming out and you're waxing poetic for 5 minutes, in between golf and poker.
Hey, this is Andrew Left at Citron Research, giving you 5 reasons why GameStop is going to $20. This is a failing mall-based retailer. So the amount of people who are so passionate about putting GameStop higher, not based on any fundamentals, it just shows the natural state of the market right now. Or as Seth Klarman said today, a bunch of frogs in a pot of boiling water. The stock was $20 before we saw any holiday data. There's no reason it doesn't go right back to $20. There's nothing in place there. You can get mad, you can hack my account, you can go to Twitter, you can sign on, you can call me every name. If you want to save the company, take your energy, go out there and actually buy something from GameStop, because that's the only thing that saves this.
About, something is oversold by 148% and, just kind of dropping the mic and expecting it to drop, and it doesn't. And you just get killed. And then here today, it's like, look, I just want love and peace in the world, and I'm going to only go long from now on and forever. By the way, I'm going to put out a long report on Monday. I love you. And when this market rolls over, I don't believe he's not going to go short again. I think he will. You see a 30% pullback, or we get into some kind of downturn that's going to be protracted. He's one of the best in the game at that kind of market. There's no way he's going to sit on the sidelines for that. So I'm not buying this bullshit at all.
Andrew's fund was up 155% last year net of.
Yes, so we heard. He told us.
He didn't do that on the short side, right? Like, obviously, he didn't do that on the short side. It was mainly on the long side and trading. So now that he's become the target of this mob on Reddit, wanted to break him, they definitely crossed some boundaries, I think, with respect to some of his family members and him.
That's never happened to you, Carson? That's never happened? Because it's happened to me. I call that Tuesday.
I draw the line when somebody, if somebody brings my family into it, like, take whatever.
But they have brought your family into it.
But that's when I mean, look, I've never had anybody really continue to cross the line. I mean, there's a guy out there who likes to set up anonymous Twitter accounts to troll other activist short sellers. And the one time he brought my father into it, I had the message passed along to him to shut the fuck up. And I think he did, at least with respect to that. So, but if you're Andrew, okay, financially set, you're doing really well outside of activist short selling. Like, activist short selling isn't really moving the needle that much. Now your family's getting fucked with. Now you're getting, and so I think for him, it's just like, hey, this isn't worth the hassle, right? I mean, Andrew, look, I'm not, nobody's going to cry for me in terms of, how I generally do year in and year out, but Andrew, makes a lot more money than I do. And I think for him, it's
No,
like,
definitely than all of us.
it's like, hey man, who the fuck needs this? And the other thing with Andrew, like it's a good thing, and it's not a good thing from my perspective. He's the most among the activist short sellers. He's the most pragmatic, business focused of us. Now that's
Agreed.
cool from the perspective of like this guy has been incredibly adaptable. I mean, he's been around 20 years. Think of how many short activists
Agreed.
have gone in this time.
Yep.
And so from a business perspective, like, hey, yeah, really admire that. Part of the reason I do this, a big part of the reason I do it, big part of the reason, Dan and Freddie, you're doing it, is because we find it meaningful. Like this is our attempt to kind of level the playing field, to some extent. Like Andrew just didn't have that. I mean, for him, it was, like it was always business. And I respect that, but I recognized a long time ago that's not how I'm wired. So I'm probably never going to make the kind of money Andrew has made. But as far as if I can do well enough to be compensated for the bullshit, this is what I want to keep doing. So I just think my analysis is de facto going to be different from Andrew's in this regard.
Look, I don't know Andrew well. I've talked to him maybe a few dozen times over the years, haven't spoken to him in years. And he's one of the toughest guys in the business, got toughest skin, and he can take a lot. And I'm not condoning anybody talking shit about him or his family. I know it's happened in the past, and maybe this time it's just like, I'm tired of it. I have, too much money and not enough time on my hands, so I'm moving on. But I'm making the point that with his skill set and his ability, in a downturn, yes, he's up 120 some percent last year or whatever it was on the long side because that's the play. But when I remember when he was up over 100% or 300 or 400% on the short side for a year, for a few years in a row. And when that opportunity presents itself again, now I believe he'll be back in that business because he's that good at it. And to say today that I'm never going to do it again, and kind of the chamath thing. By the way, I'm a populist guy and I'm running for governor at the end of this interview. And Andrew's going to put out a long report on Monday. You know what? I wouldn't be surprised if that Reddit community says, "Fuck you, we're going to sell your long report." We'll see what happens there.
Speaking of Andrew in terms of just a giant macro picture, the fact that he said that, is that to me, that's like a market top, right? I look at it as a trader and I say, man, one of the best in the game at this just tapped out. And that gives me all the conviction in the world to say, okay, you have all the signs. You have SPACs, you got retail chasing, calls, gamma squeezes. You have all these things. So my question to you is, how does this play out until our next meeting a month from now?
I mean, it's hard to call a top. I mean, look, you would have thought maybe the WeWork blow up was a top. I mean, look, I've actually grown my hair in order to stand a decent job of maybe becoming CEO there or something. I've seen that that's, I think, all you required in order to run that company. It's incredibly difficult to call tops, and I think the interesting thing, there was a great thread on Twitter, and unfortunately I can't remember the person who put it out to credit them, but they looked at the 2000 top. And interestingly, they went back and looked at a number of different research houses and the things they were saying around the top. And it didn't really occur to people until 2 to 3 months after the NASDAQ had peaked, when the research tone turned and people kind of really thought we were past the top. And so while there has been a significant move up in the most heavily shorted names, in SPACs, and the real garbage in the market, you look at a lot of the mega caps and actually they're not up that much from where they were kind of, back end of September, October last year. So, while we'll obviously at some point look back and it'd be nice to think it'll be during my career, but it's starting to feel like that won't be the case. It's quite possible we are almost past it, and maybe we've just been so focused on the particularly painful and headline grabbing parts that we haven't noticed it. But I'm not going to make the mistake I've made for at least every year for the last 5 years and call it the top, because it just tends not to be the case.
Well, so look, one thing is, I mean, Andrew's by far the savviest trader among us activist short sellers. So, like, he gets market direction right a lot more than he gets it wrong, I think. And, so if you look at him and you say, well, this must be the top because he's pulling the ripcord, I'd say, nah, I mean, I think he's reading the tea leaves, and we're not at the top in terms of the speculative mania. Because also I don't see any rate hikes on the horizon here. Now, the flip side is, though, going back to that fragility that we were talking about, particularly because of all the passive that's in the market and the degrossing by hedge funds. So yeah, maybe things will start to break, and when they break, they'll break quickly. But regardless, I mean, we've been watching every year more and more short focused hedge funds shut down, and I mean, we just didn't get a lot of fanfare, but the biggest one that was left I think they just shut down a few weeks ago. But that's just another one that's bit the dust. So short sellers have been getting carried out like really since 2013, and we've not been at the top.
Yeah, I have no desire to call the top or the bottom of anything at any given point in time. I don't have Andrew's money. Andrew would be happy to remind me of that anytime I spoke to him. I don't have Carson's money. That's fine, but I have enough to sit on the sidelines and see
You don't
that.
have the painting.
Yeah,
You
and
don't
I
have
can always get Carson to sell that painting and maybe loan me some money. And just sit on the sidelines and see what happens. This is definitely not the right time to say, listen, I have a valuation short here to talk to you about. Maybe if you're talking fraud, but even then, I could make the case that, does fraud even matter anymore? When I can point to several of them worth tens of billions of dollars, that's not going to last. That's not always going to last. But I can sit here and wait it out. If that's what the market needs me to do, fine.
Dan, while you're sitting there waiting it out, I mean, is the money thing the reason you're sitting in the dark? Is it? I mean, are you planning on waiting it out in the dark, or is that just the mixing it up this week?
Buy some call
I
option.
I feel most comfortable sitting in my murder room. Just just what I enjoy doing. Is that wrong?
There was some good news in this world of activist short selling recently, and that was the recall of the Jet 7 Extra Flex catheter by Penumbra. So
Yeah.
we've interviewed Gabriel Grego to talk about that. So Gabriel will be joining us from sunny Miami to talk about that.
Good on you, Gabriel. Good on you, Mark Cahoda, staying after it. And for
Roddy.
those people, Roddy, for those people who don't think that shorts are good for anything, maybe I'm not, but apparently they are. So good for you guys.
Yeah, and we look forward to catching up next month on the renamed Long of It, to appeal to a wider audience.
Where we will apologize at the top of the hour and talk about all our long picks.
Awesome.
Cool. Well, the stock from last year that I really want to talk about is Penumbra, because Penumbra was actually a huge win already in some respects for Quintessential. And we have Gabriel Grego here with us to talk about it. So really happy to have you back, Gabriel, and thanks for taking the time.
Delighted to be here.
Well, so first of all, congratulations on the Jet 7 being recalled, or the Jet 7 Extra Flex being recalled. My view, and what I said on this show last month, is that I think absent your activist short selling campaign, that recall wouldn't have happened. Do you think that's a good read, or am I being a little bit self-aggrandizing about activist short sellers?
No, I tend to agree with you. And, obviously it's impossible to get inside the mind of the FDA officers who finally decided to take action. And it's also impossible to know what has been the final straw that led them to make that decision. But I think it's probably a combination of the fact that we made an initial, repeated number of intervention, because if you recall, we did the one together where we presented our view about the catheter, that we did a follow-up on the deception that was happening in a lot of the research of Penumbra. And together, this was also advertised, but we made less noise about it. But I had a very talented legal team that worked on writing the FDA. We targeted a number of people that we think would be decision maker and some watchdogs with a very detailed request, copied in a lot of people, asking them to remove the catheter. So I don't know. It's probably a combination of these things that eventually led them to take the decision. It's impossible to know for sure, but I think the odds that it would have been recalled if we didn't intervene are very, very, very low.
Is there any update on management or the board? You found these, and you alluded to it a moment ago, but you found this bizarre pseudonymous personality of this antique bosa, and it actually became really hard to follow ultimately, because the company came back at you spitting fire and brimstone, when obviously this personality, or this pseudonymous personality, existed. And then there were also, I know, some thoughts that one of the current board members who overlapped with the pseudonymous or the avatar might have had some role. But yeah, if you could update us and help kind of clarify what's going on with the avatar, and where you think things stand right now with the board and management.
Yeah, about the avatar, I've never received any single piece of information that suggested that the thesis was wrong. Meaning that for people that maybe don't remember or haven't read the follow-up report, we basically we noticed that a large proportion of critical Penumbra research, especially the research that has to do with the clinical trials that were used in part to market Penumbra devices, or to get FDA approval, or to boast for their IPO. A lot of these clinical trials research papers were actually authored, all of them, or almost all of them, by doctors that were paid by Penumbra to varying degrees and given all sort of incentives. And in many instances, also by this strange character who doesn't exist, whose name was Antique Bose, who was a sophisticated deception on the internet, but didn't exist. So basically had fake LinkedIn profiles, multiple fake Wikipedia pages, fake YouTube channels, fake Twitter, fake social media, to make it seem as though it was a real person, when in fact it didn't exist. Now, this person, the actual author of those papers, as we said all along, also in the original report, was Arani Bose, that was the company's co-founder and chief science officer. Most of the places where you could find these papers on the internet, the authorship would be signed by Antique Bose, which is this non-existent character. So again, to make a long story short, nobody knows for sure why they did that. In my opinion, as I said in the paper, the main reason was had to do somehow with the IPO. The IPO in the prospectus said very clearly that one of the reasons why Penumbra was a good investment, it was because it was backed by a lot of research and a lot of good science. Well, a lot of that science, a lot of the research, guess what, is authored inter alia by Arani Bose, that was the company's co-founder, and therefore, in our opinion, was highly conflicted. So one theory is that the company might have been reluctant or concerned about going into IPO, mostly backed with research that was in one way or another full of conflict of interest, and that's why they came up with this character. Now, the company admitted clearly in an official statement that, yes, those papers which are signed in certain places by Antique Bose are actually the real author is Arani Bose, the company's co-founder. They deny being the ones that are behind the fabrication of antique bows, but they never even gave a satisfactory answer as to then why that would be the place. How come nobody complained about it? How come even after we made it public that this was the case, we have never seen any official complaint, any lawsuit, any police complaint about basically what would be then a case of identity theft? My working assumption is that whoever did that, and we believe it's some firm in California, we're not going to repeat the name now because no point of doing any further damage, but we believe we identified the physical executors of that deception. But we believe that the entity that probably ordered such deception was either Penumbra or people close to Penumbra. This was never disproven. So now the interesting thing is that this thesis, this deception, opened kind of a can of worm. Part of this can of worm was uncovered also by Marcus Aurelius Value, which is another activist short seller who published a very interesting report, who I suggest everybody probably should read, which basically seems to suggest that there are other characters beside antique bows associated with Penumbra research, which have big problems. Either they were involved in previous lawsuits for writing conflicted research, having all sort of conflicts of interest, having received fine from the FDA, in many cases being either overtly or covertly incentivized by other pharma companies to write conflicted research, which then ended up hurting patients. So yeah, we believe that that was just a sign of a lot of bad things which are going on at that company.
What Marcus Aurelius highlighted was the role of one of these clinical trial providers. It was a clinical trial provider that had already settled, I believe, or been adjudicated to have violated the law in prior clinical trials. And I think one of the implications is that this is an inappropriate firm to be conducting clinical trials. It's interesting because last month Zer0es had on Keir Callan of Scorpion Funds, and Keir presented a short thesis on another medical device manufacturer named Nevro. And there were also similar issues with that in his thesis about who did the clinical trials, whether they were impartial. And it's really interesting, and that you have this whole world of clinical trials for medical devices and the potential for the firms that assist in holding the trials to be highly conflicted and perhaps inappropriate. Is that something that you've thought a lot about, and or what? I mean, do you have a view on really what needs to change from a legislative or regulatory perspective here to better protect patients?
Yeah, you touch on a very sensitive key here. I mean, I want to hope that this kind of issues are limited to a handful of bad apples in the industry. I really want to hope so, because let me tell you what I think is going on. And again, I'm not going to name names just because I like to be factual and and reference. So I'm just going to talk in general terms, not about a specific company. But what I think is happening in some of these healthcare companies is that these people get together with good connection. They start a company. They come up with a product. The product gets approved by way of conflicted research. Very often, research that shows effectiveness when there is no real effectiveness vis-a-vis existing therapies. On the basis of that research, the product gets approved, gets FDA approval. On the basis of that research, it gets marketed and sold to doctors and hospitals. More than that, there is what seems to be like corruption on multiple levels. So number one, obviously, on the doctors that end up doing the conflicted research. And there are a million ways, we're not going to get into that because they're very technical, but there are so many ways to make it seem as though a product works when in fact it doesn't. You can mess with the sample size, with the sample people, you can mess with the follow-up. I give you an example. Something that we heard was that in some cases, there was no follow-up made on some patients. So for example, a patient goes through a certain medical procedure, and sometimes something happens on the very same day and the patient dies on the table, and obviously that's a failure. But sometimes it dies 2 days later or 3 days later. So it's very important that the company keeps track on each and every one of those patients to make sure that he didn't die the week afterwards as a result of the operation. So in many cases involving a company that we were studying, we saw that there was a huge number of patients that apparently the company claimed to have lost contact with. So they had no idea whether they were alive or dead, for example. And that's just one of the many ways. So, and these doctors obviously can be incentivized in all sort of ways, obviously with over consulting fees, sometimes with stocks of the company that has the device, but very often with in other covert ways as well. In some cases, we're not going to name the company that we're talking about, but we heard that one of the doctors that was involved in research actually had a sexual relationship with one of the distributor of this product, and the company was aware of this event and of this situation, and instead of cracking down on it, they actually encouraged it because they figured that it might influence positively the relationship between the doctor and the company, or even give them some leverage, because in this case, to my understanding, this relationship was rumored to be is adulterous one the correct word here? So this is on the research side. But then even after the company gets the approval to market the device, then all of a sudden they're selling these products all over the place. And they would be trying to sell the products by persuading or incentivizing doctors and hospitals which are supposed to buy in all sorts of ways. For example, in giving in financing research for completely unrelated products or conditions, but which is still very welcome to a hospital, for example, because it means money, because it means status, prestige, credibility, and some other ways like that. So you have a product that gets approved on the basis of false research, gets marketed on the basis of questionable marketing practices, and then when problems inevitably show up because the product either doesn't work or malfunctions and maims or injure people, then a company might do everything in its power to make sure that the product doesn't get recalled, and tries to exert influence maybe on the regulatory bodies, tries to exert influence on doctors so that they don't report any adverse events. And at the end, everybody pays for this: the patients, the society, the competitors too, which maybe they're not cheating and they need to be heard. So again, I'm not claiming that this is happening in any given company, but I'm sure this will resonate on some names. And I definitely think there should be a crackdown on this kind of behavior, especially if it's generalized.
That's horrifying, but not shocking, unfortunately. And yeah, it just goes back to this point that that I make about what really bothers me in the financial markets is that we're incentivizing this behavior because there's a bid for these company stocks. Managements of a lot of these companies, from what I've observed in the past, they hit those bids, they make lots of money, and most of them probably at the end of the day get away with it. I think the INSIS type prosecution is really the exception to the rule. And that brings us back to Penumbra. I mean, and also the same thing with Nevro. We had the JP Morgan healthcare conference at the beginning of January, and I was wondering whether these stocks would be meeting their Waterloos there because maybe they'd be facing tough questioning.
You were very optimistic.
Exactly. It's been amazing, straight up and to the right since JP Morgan. So seeing that, it's just a depressing reminder of how in our industry of investing, so few people really give a fuck.
Well, I would like to name some names here, since you're touching on the issue of analysts. So you mentioned the JP Morgan conference. I watched it. I watched the questions that were posed to Penumbra's CEO. They were all softballs. I and some other people, we actually were watching and did put in some questions, which obviously were completely ignored. By the way, they were not very aggressive questions. They were very legitimate questions. And since I wasn't given a forum there, I'll grab 5 seconds here.
Please.
One of the reasons why analysts and probably institutional investors too keep clinking on Penumbra, even after what used to be their flagship product got recalled, is because they're very hopeful on the other line of products, which is the vascular part of the business. And they have another product called the Lightning, Indigo Lightning 12, which is essentially also a catheter to treat vascular type of blood clots. We have been saying all along from the very first report, the one that we broke to the public with you, we said that we were worried that this product was problematic as well. It wasn't clear whether it had injured or killed anybody at the time, but it was clear that it was malfunctioning at a crazy rate, even at the stronger rate than the Jet 7 Extra Flex. And we kept saying, watch out, because all of the hope for the growth of this company is for this product, basically. And this product keeps failing at the crazy rate. And the metaphor that you use, that it fails more than an umbrella that you buy on a street corner. So turned out that recently a death showed up on the FDA database for this product. Allegedly the first death, but we heard unconfirmed rumors from some of our sources that there are more. We don't know if they're true or not, but we have no reason to think that they're not. But in any case, the first death showed up, and I asked this analyst online, can you please ask the CEO whether this is true? I mean, I have no doubt that it's true because it shows up on the database, but if he can comment on this, please. And obviously the question wasn't asked. So just to name some names, another conference that was the one that took place at Bank of America Merrill Lynch on the same day where we released the Antique Bows profile. So the analyst that was in charge there was this Bob Hopkins. This character, who was well informed about my report, him as well as obviously the Penumbra CEO, I assume, chose to go on for a full hour asking obviously self-flattering questions to Adam Alcesser, but not mentioning anything about the Antique Bows affair, which obviously was important enough that the stock was halted for an hour in the same day. Well, this gentleman has sent an email to, I guess, his mailing list interested in Penumbra, which includes all of the longest investor, I assume, or most of them, saying that the reason why he didn't ask any question was because I had sent that report at the last moment, only a few minutes before the interview. And that's why he couldn't ask anything, and that's why Adam Alcesser couldn't answer, because he hadn't read it. But I sent this not 15 minutes before, but an hour before, and I replied to this Hopkins guy, hey, you're actually lying, to hundreds of people on this thing, and I have documentary evidence that is not the case. So I would please ask you to correct that. Obviously, he never did. And funny enough, we find out that the Bob Hopkins appears to be the son of a very famous, very skilled, apparently, a neurosurgeon that works in Buffalo, New York, which works in the same institute with a guy called Siddiqui, which seems to be one of the doctors that also is involved with Penumbra, and that also was involved in a lawsuit for a company called EV3, which was accused of the exact same thing that we suspect about Penumbra, i.e. conflicted research. And this, again, ties back to the Marcus Aurelius report. Unfortunately, the people which are supposed to be the stewards of investors, which is the sell-side research, they fail them over and over every time there is a situation like this. It's very sad to see. I don't think there is much to do. I think regulatory intervention is very hard here because they will say that they're just saying what the management is telling them. So again, my solution, and I think your solution too, is to just invite the public to be skeptical and to make the terrain easy for activist short selling, which sometimes are the only people which have a vested interest in the truth coming out, other than the wider public that sometimes can't do anything about it.
Okay, and to say very clearly, Bob Hopkins, analyst at BAML, is an enabler of this deleterious behavior. He seems to be deliberately ignoring the risks that this product poses to the general public, and in doing so, he enables that stock to remain high, where presumably insiders can continue to enrich themselves.
Yep.
So I just want to be very clear on that, because I think it's important that when we're in these situations where, I mean, it's literally life and death, that the enablers are clearly labeled as such. And
absolutely,
you're bringing that up.
And for fairness, I would like to say that unfortunately, this situation, I'm sure, I mean, you're more familiar to it than I am. In my experience, this is usually the case. The sell side analysts usually are the last people that get convinced, if ever. I mean, Wirecard is a great example here with Heike Pols. To the very last, she had a buy rating on the stock just like everybody else. But that's the rule rather than the exception. But there are some exceptions. I have to say that there is this other analyst whose name is Ryan Zimmerman from BTIG, who used to be another bull on the stock. And I actually had a phone call with him in the middle of our campaign. And I called him up and I said, listen, I've read the report. You're not giving any space. I'm not saying supporting it, but at least tell the investor that, that there are these question marks, which, by the way, ended up being dead right, because our main message to long investor is watch out. These guys are going to get their catheter recalled. And it happened, right? So I said, I think you have a duty to investor, at least to inform them that this risk exists. And he heard that. At the beginning, he was a little skeptical, but he was brave and he removed his buy rating on the stock. And to my knowledge, he was one of the only ones who did so. By the way, Bob Hopkins has a hold rating, had a hold rating all along, but in his rhetoric, obviously, he seems to support the stock. So why am I saying that? Some people like Ryan Zimmerman probably can put ethics before self-interest, and I invite other people to follow his example.
No, I'm glad you brought up Ryan Zimmerman of BTIG, because by the same token, we should recognize those who are doing the right thing in the markets, because we certainly want more people to follow that example. So thank you for that.
Sure.
Gabriel, thank you very much for the update on Penumbra and the in-depth discussion is into some horrifying dysfunction in the healthcare system. But we're all better informed as a result of it. So thank you, and keep fighting the good fight, man.
Thank you, and great again to be a platform for one of the only few platforms for this kind of skepticism, if you want to call it, which, as we all agree, is an important thing and is an important part of trying to make the market a safer, or at least a more transparent place.
It's been not the greatest start to the year for short sellers, but hopefully next month will be a little bit happier. Really glad that we had Gabriel come back and update us. And yes, hopefully we're transitioning toward an environment in which truth matters at least a little bit more.
Well, I stopped paying attention since the doctor was banging the rep for favors. I think we should have spent more time on that truth.
Very insist. Yeah, I was going to talk about Sunrise Lee, but
yeah. All right, see you guys.
Cool.
All right, have a great day. Thank you, Carson.
All right, thanks.
Bye, everybody else.